You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is, well, I think you know, it's Thursday, first day of February 2018. So glad to have you with us. If you're returning, welcome back. If you're here for the very first time, a special CFRN welcome to you. We are glad to have you with us. We're in our second decade of broadcast history, so do pencil us in for the next decade. All right? Now, today I have a chart of the S&P 500 E-mini futures. Quite a tale of the tape. If you cannot see the chart, easily solved. Go to our homepage at cfrn.net. On the right hand side of the page, click the big microphone, follow the instructions, and you'll be registered in about 30 seconds. And the good news is you'll be registered all the way through the end of the month, right? You register once per month, you're good for the entire month. You'll be able to enjoy the show each and every day with one-click access. There's another option. Go to youtube.com/CFRN live. If you do that, bookmark the page, you'll also have one-click access. So, again, so glad to have you with us. You can see the chart up there, the S&P 500 E-mini. We'll talk about that in just a moment. It is February 1st. Yesterday was January 31st. And so the CT Global Token presale is officially ended. So, we've got to wait for the dust to settle, final payments to come in for orders that were placed and reservations that were held, and to make sure everyone is secure with your certificate and also with your MyEther wallet. Yesterday during the show, we created a short video that shows you how to get your MyEther wallet open. And so we need you to, over the next, I'm shooting for February 14th as Mass Distribution Day. Valentine's Day. Isn't that cute? All right. But that will depend upon you sending us an email, okay, with your Ether wallet address. If you watched that video yesterday, it'll become crystal clear. There's also a video on the YouTube channel. It's simply how to MyEther wallet, okay? So watch either one of those, or if you simply go to myetherwallet.com, that site's done a very good job of explaining exactly how it works, all right? And then once you have that disbursement made into your MyEther wallet, be prepared to then transfer it into your hardware wallet so those bad hombres on the internet don't get their hands on your cryptocurrency. All right? Okay. Let's take a quick look at the numbers from around the world. Well, you know, let's talk about this for just a second, then we'll look at the numbers. Based upon this browser's ability to cooperate, I think that'll be our next to go at it. Let me ask, has anyone actually read the, and I'm doing air quotes because it's radio, the memo? Has the contents of the memo been made public to the general public? And because here's what I know so far. Representative Adam Schiff, who is the ranking Democrat on the House Intelligence Committee, has accused the committee's Republican chairman, Devin Nunes, of modifying a secret GOP memo that is thought to accuse the FBI and the Justice Department of improperly surveilling a Trump campaign advisor before the 2016 election. House Intel Committee Republicans voted on Monday to release the memo, despite Justice Department warnings that such a move would be extraordinarily reckless because of questions over its claims' accuracy. That started a 5-day countdown for the White House to approve or deny its release. Now, Schiff has said in a statement last night that Nunes made material changes to the version the committee sent to the White House. He asserted that committee members were not immediately made aware of the modifications and had no opportunity to compare the original memo to the modified version until Wednesday evening. This is deeply troubling because it means the committee majority transmitted to the White House an altered version of its classified document that is materially different than the version on which the committee voted. That's according to Schiff. Now, Senate Majority Leader Chuck Schumer castigated Nunes over that revelation. It's clear that Chairman Nunes will seemingly stop at nothing to undermine the rule of law and interfere with the Russia probe. He's been willing to carry the White House's water, attack our law enforcement and intelligence officials, and now to mislead his House colleagues, according to Schumer. A representative for Nunes responded to the allegation, saying that Schiff was complaining about minor edits to the memo, including grammatical fixes and 2 edits requested by the FBI and by the minority themselves. The Republican memo, which Nunes contributed to, is said to claim that top U.S. law enforcement agencies used the Russian dossier when seeking authorization to spy on the Trump campaign advisor, Carter Page, before the 2016 election. President Trump and his allies have pointed to that as evidence of bias in the Russia investigation because the dossier was compiled as opposition research. Democrats have said the memo contains inaccuracies and aims to misrepresent the facts in the Russia investigation. They have produced their own memo in response. Okay. The FBI on Wednesday took an unusual step of publicly warning against the memo's release, saying in its own statement, "As expressed during our initial review, we have grave concerns about material omissions of fact that fundamentally impact the memo's accuracy." Trump has indicated he wants to approve the release, notably during a hot mic moment captured immediately after he delivered his first State of the Union address on Tuesday night. Sometimes those hot mic moments aren't always an accident. Just saying. All right, let's go look at the numbers and see where we stand. Now, these are the cash numbers from the cash markets around the world. We'll talk futures here in a few moments. In the U.S., currently, the Dow up 113 points, almost 0.5%. NASDAQ up 12.5. S&P 500 up 9. And the Russell 2000 up 0.5 point. In our commodity basket, crude oil gaining 77 cents. That's a little over 1%. Trading 65.50 last. Gold up $2.90, trading 13.46 last. Now, in the Asian markets, mixed day there. Nikkei tacked on 387 points by the close. That's almost 1.75%. Shanghai lost 34 points, and that's almost 1%. And the Hang Seng at the bell was down 245 points. That's 0.75%. So certainly a mixed day in Asia. Europe, color of the day, certainly red. The FTSE dropped 43 points. That's a little over 0.5%. The DAX dropped 185 points. That's 1.5%. And the CAC down 27 points, 0.5%. So, strong day here in the U.S. so far as we attempt to come back from this huge sell-off. And we can see that 28.14, this area down here, has served as some pretty good support. Now, let's go to this chart here. Again, all dependent upon cooperation. Yeah, just waiting for cash. You know, I've troubleshooted that issue over and over. Awkward. Tell you what, Michael, if you're ready, if you're standing by, come on in.
I am standing by.
Okay, yeah, finally gave me my chart back. So, all right, there it rolls. Give me one huge issue with the Chrome browser, and there's a number of fixes, none of which I found really works. I may try Firefox tomorrow just to see if there's a significant difference. Okay. So here it is. Dun, 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 dun. We broke down below 10,000. We're now challenging that 9,000 mark. That 8,000 number I looked at oh so very long ago. High, low, support. I hope we don't see it, but we just might. And so if we do, that's the way markets work.
That is a big move down.
It is, and it's been a continuous move down, and it's just like, healthy markets moving higher. They're going to have pullbacks. Sometimes those pullbacks turn into reversals. And when a market is sold off as steadily as this one has, eventually there's going to be a pullback. And when that happens, buyers will have a chance to move in and turn that into a reversal. How will it shake out? Well, we'll all know together at the same time. Now, one more thing I was going to throw at you real quick, but...
Oh, do you want me to take them? Or
yeah, go ahead. Yeah, no. Go ahead and take them so we can get that handled.
All right. And audience view is seeing my screen.
Yeah, they're seeing your screen. This will chap your hide. Digital payments company Square, you might have heard of it, is rolling out the ability to buy and sell Bitcoin to its users of the Cash app. Company announced today that following news last year that it was testing the future with a limited number of users, the option is being expanded further. That said, users in the United States, states of New York, Georgia, Hawaii, and Wyoming, which have more restrictive regulations around cryptocurrencies, won't be able to access the option just yet, but everyone else should be able to. The app allows users to send payments to their friends and family, though notably, they may not be able to share funds to generic contacts on their phones. The company began trialing the Bitcoin buy option last November, letting select users buy or sell Bitcoin through their accounts. In statements on Wednesday, Square Chief Executive Jack Dorsey, who also leads the social media giant Twitter, endorsed the new service, posting that Cash App offers instant buying and selling if you don't want to hold. He continued, "We support Bitcoin because we see it as a long-term path towards greater financial access for all. This is a small step." In addition to the Bitcoin integration, the company also released a dedicated web page explaining Bitcoin and how its underlying technology works. And, well, there's a long story behind that, guys, but Jack Dorsey, you're a real mensch. Unfortunately, you're like 2 months too late, but God bless you. All right. Take it away, Mike. I'll hit mute and you got it.
Okay. All right. Thank you. And yeah, love that story. Alan, is that your lowest weekly trading zone on the chart? You know what? I'll look at them in a minute, and I'll let you know, Alan. Okay. But it is Thursday, and
the lowest zone is 2790/91.
Okay, so it is not. Yeah, bless him. That's what they say, Joe. All right, here we go. Good afternoon, everyone. Today is not Monday. Today is Thursday, the first day of February 2018. Today, in the live training room. Well, first, if you have not taken the free trial, go to the homepage here at cfrn.net, where it says sign up for the CFRN live training room. 100% free trial. User indicators on our strategy. Click here. Click there. Okay, once you click there, you'll be brought to this page. On this page, just type in, excuse me, just type in your email address, your first name, and how you found us, and then hit the submit button. Once you hit that submit button, you will be sent a confirmation link. You must hit the confirmation link. Okay, we don't know you took the trial until you hit that link. All right. Now, all right. So the spreadsheet. I didn't fix that one problem that I had this morning with the spreadsheet. But anyway, today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the first day of February, as I said. You see right over here. And today we made 8 ticks in the euro, 2 ticks in the Russell, 2 ticks in crude, and 2 ticks in gold to get us to exactly $100 per contract. Today it took 114 minutes and 11 trade setups to get there. We had really small gains today. I don't think we had one. Yeah, all the gains are small. We had +2, +2, +2, +4, +2, -8, +10. So we had 1 +10. Anyway, 114 minutes and 11 trades to get to the goal for the day. Okay, but it was a green day. We did get to the goal for the day, and on the month now we're at $100 per contract. Over one day, averaging $100 per contract. On the year, this number got messed up down here. I don't know what happened here. You know what, if I just delete that. There we go. All right, now this number is going to be right. This is 20. Okay, so we're at 2618.75. Let me just make sure that that's right. Yeah, 2618.75 over 20 days on the year, averaging 130 per day. Okay, and on the month right now we're at $100 a contract average. All right, that is the spreadsheet for now. And minimize that, and we'll go over what happened. Okay, you see how choppy things got here in the last hour or so, the last hour and a half. Really choppy. But we started off right in here. We missed this long opportunity right here, and then we got this one. This almost gave us the goal for the day, but I was just a little slow on it, and I ended up only getting 2 ticks out of it. It almost gave us the goal for the day. This isn't even a valid trade opportunity. I don't know why I haven't highlighted. Because we had not broken. Oh, yeah, it is. That's why I had to highlight. I remember questioning myself when it was happening. It's going down into dynamic resistance, not dynamic support. So that was a valid trade opportunity right in there. Okay. Then we had a break even there and a break even there. And that was it on the gold. All right. And there was no other opportunity on the gold today. Okay. Let's scroll way back here. There we go. All right, on the euro this morning, I think I got them all highlighted. There was a momentum short right there. There was a long right here. We got 4 ticks on that. Excuse me. Another long right here. We got 2 ticks on that to get us up to +6. Then we had a break even and a stop out. That put us at -2. Then we got 10 ticks right here. That put us at +8. Okay, now it looks like I missed a shorting opportunity right here toward the end. It was right at the end of the morning session. There was a shorting opportunity there that gave some profit, then it changed directions. And I'm looking down here at the slingshot as well as at price, and not a lot of opportunity anywhere. Maybe a short right here, right, for that leg down. And that was it on the euro. Okay. On the crude now, we missed this one right here. That gave, it probably, I don't know, if you got in here, what is it, 43, and it went up to 53. So if you would have gotten filled right there at the close, and you got filled right there at the top, That would have been the goal for the day. Okay, but then it got really choppy, and it had this huge leg up. It gave one more long opportunity right here. We got a couple of ticks out of that, and then it just crashed off of that. There was another long right there that we missed. It had a break even there, and one here that we didn't get filled on, right, for that leg down. And then during the break, there was a long there and a long there during the break. Okay, and that was it on the crude. Now the Russell, I think we were pretty free most of the morning on the Russell from the weekly trading zones here on the ES. I don't know why that stopped. There it goes. Okay. Let's just take a look at the ES. You see the ES started out way down here. All right, and the ES did have some shorting opportunities in here. One right there, and then a long opportunity right here. Then we switch directions again, and we had another shorting opportunity right there. So the ES had some good volatility today. All right, it had a long right here. That would have been a break even. And then it ran back up into the zone. It would have been a long from back here. Okay. Does anybody have any questions about these? I mean, I know I'm not drawing the trend lines. I'm just eyeballing them. But, you know, if you were a partner, then you should be seeing this stuff. Okay, and that was the ES. So the ES had some good volatility. I'm sure the Russell had some good volatility with it. With this huge leg up right here on the Russell. We'll get to that in a minute, though. We only ended up with +2 on the Russell. This one trade right here with +2. Hang on, my charts just froze. Okay. Well, you can see I drew the trend lines when I was seeing things in the ellipses. So there was a shorting opportunity there. Yeah, there was a shorting opportunity there. And a long opportunity there. And another long opportunity over here. Another long opportunity right there. Then it tried to change directions here. Didn't give us any trade setups on the way down. Okay, pulled back up to the BBC, then the black step line crossed up above, and then back down below, and then back up above. So it didn't give us any trade setups right in this area, right here. And you see the slingshot is all messed up, all through this area. So we didn't have anything in there. And I'm sure that's probably what I was looking at. And then right here, broke dynamic support and had a shorting opportunity. And the slingshot's all messed up again. See, there were many times this morning that that price was trading on the wrong side of the BBC for the type of divergence that we had. Anyway, right in here, we got our couple of ticks in there. And in here, this cycle started going up. And in here, we had bullish divergence, close on the other side of the MA1, so we couldn't do anything because we hadn't broken dynamic resistance. Then we changed directions. It was a short there, a long over here, a short over here, and then during the break, this huge leg up right here. Now, there was nothing down here telling us, well, actually there was a bounce off the BBC right here. Okay, but this was, again, during the break. Bounce off the BBC right there, then we need to put in a higher swing. Then we needed to break dynamic resistance. Then, on this leg up right there, you know what, there are so many spots where you could have entered. I'm just going to highlight a couple of them. right there, because right in here there's like 3 more. Right there, right there. Then it changed directions, gave a bounce off the BBC right here. This was all during the break. Okay. Is that kitten in here? Okay. All during the break. Giving it a long opportunity there. Another one there. Another one there. And then the slingshot flipped around down here. And that's it. Okay. Alright, and I already did the ES with you. So the Russell, during the break, the Russell gave a ton of opportunity. A ton of opportunity. It doesn't look like anything would have stopped out. It gave a ton of opportunity and no stop outs. I mean, there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 trade opportunities on the Russell alone during the break. And if he only took 4 ticks on each one of those, then you're doing pretty well on the day. Anyway, that was the morning session. Okay. Now, back to the spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the first day of February. We made 8 ticks in the Euro, 2 ticks on the Russell, 2 ticks on Crude, and 2 ticks on gold. That brought us to $100 exactly. On the morning session. Today it took 114 minutes and 11 trades to get to the goal for the day. At that point, we're up $100 per contract, and we took 11 trades today. On the month now, it's day 1 of the month, so we're up $100 per contract. And on the year, we are on our 20th day, and we are at $2,618. That's averaging $130 per day. Okay. And hold on. Let's see. If you have not taken a free trial with us, go to the home page here at cfrn.net. Okay. And right up here at the top, it says sign up for the CFRN live training room. 100% free trial. User indicators on our strategy. Click here. When you click there, you'll be brought to this page. Right here. Where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, you must click on that link. Alright. Alright. That's it. And with that, we can pass it back to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Well said, well said. Yeah, I'm ready.
Okay.
Alrighty.
And for everyone who's in here who is on the trial, let me just go take a look. I have no idea if anybody in here is on the trial. But anyone who is in here who is on the trial, if you want to get into the partners meeting tonight, the partners meeting is at 9 p.m. Eastern. You must become a partner before the meeting. If you don't know what it takes to become a partner, send me a quick email at support@cfrn.net and just put partner info in the header, and I will send you all the information you need. Okay? There.
Alrighty, and the recap of the recap was?
Today it took 114 minutes and 11 trades to get $100 per contract. So, it was a struggle this morning.
Hey, but you did it.
I did. I did. Indeed.
Okay, John was there, and it said offline, and then I don't know if he's having internet problems or not. Can you see my charts?
No. Nope.
Okay.
I cannot. And John is not there right now.
Yeah, no, he was, and then when I clicked on his mic to unmute him, it made him disappear. But, okay. Let's try this again. Why would those charts... Oh, there they are. Boy, that was quite a... Now do you see them?
Yep.
Huh.
Yep, I do.
Didn't do anything, it just took forever. Okay. Alrighty then.
Alright.
Okay, getting logged in over here. And when I called him, his phone rang. It sounded odd. He may have had another power outage or something. But I know he was sitting there waiting. Well, we'll see if he pops back in. Okay. Let's go ahead and run over this because it's pretty big deal. A major South African city is about to run out of water, and officials say it will be the worst disaster since 9/11. Cape Town, a coastal South African city of about 4 million people, is about to run out of fresh water. After 3 years of persistent drought, the government is warning that day zero, when it will be forced to turn off most faucets, will be April 16th. That's when reservoirs and water sources are forecast to hit 13.5% capacity, at which point the city is expected to move most residents to a strict water rationing system. As Cape Town's reservoirs of fresh water get dangerously close to dry, locals are beginning to store water in jugs and fill up at spring-fed taps set up by local breweries. Those who can afford it are boring many backyard wells to collect private water stashes, and some hotels are investing in pricey desalination plants to make the ocean water drinkable. In this technologically advanced age in which we live, I understand that water may not fall from the sky, but well, what about our ability to manufacture the weather? As Wayne talks about, the government's ability. Will we let these people? The city's largest dam is just 13% full. Look at that picture. I mean, look at that.
Wow, that's the largest dam?
Long-term forecasters say it's impossible to predict how long the crisis will last. Well, and it could rain tomorrow. And it could rain for days. California went through that incredible drought. Then all of a sudden it started raining, and it rained so much, lives were lost, homes were lost.
Yeah, mudslides and all that stuff.
From the mudslides. So, boy, keep them in your prayers. Water's important. We can go quite a while without food, but without clean drinking water, last too very long. So, that's going to be difficult. All right, on the S&P 500, let's just take a look at last night's trade alerts. Okay, the indication was true in the email that was sent out last night. In fact, here, let me give you a chance to just grab a screenshot if you want to grab a screenshot. Okay, we'll try that again. There we go. Okay, let's see if it's going to flash today. Now, see, that's odd. Some days it flashes and some days it doesn't. I'm thinking it has to be one of the tabs that I have open on any given day that I some days have open and some days don't, and for the life of me I can't think of which tab that might be. You don't see a flash, do you?
Nope, not flashing right now.
Yeah, see, that's odd. Sometimes it does, and sometimes it doesn't. So last night's email said to consider selling 28.29, and that happened right about here. 28. 29. All right. I think we all got the general idea. Sell 28.29. Okay. Now these are this week's weekly trading zones. You can see how we came down for the week when we punched through that 64.65. Price pulled back to the zone. It's that same pattern I've been drawing for years. This is the reverse of it because we're moving down. Price moves through, comes back to confirm. Good resistance. When we drop through it, we reverse up. And when we pop through to the upside, we reverse back. Okay. And we drew the trend line that day on the radio show, and we said, okay, we've now pulled back, and if we start getting closes below that trend line, that will be a good indication that price is, attempting to get to the next zone below. When price hits a zone, the most common thing to happen is consolidation. When it's consolidated for as long as it needs to consolidate, it will then attempt to move to the zone overhead or the zone below. Alright, so we broke the trend line, came down, hit the zone below, caught a hop, and came back and fell. Now, this right here, you might have been tempted, and you could have said, I'm going to go long here, but it was pretty evident pretty quick that that would have been the wrong side of the trade. Now, on that day, we had a trade alert to be short 28.48, and that worked out reasonably well. Can't complain with that. Then we broke through the next to the lowest weekly trading zone. The lowest zone is considerably further, which concerns me because everybody's still talking about, the big sell-off hasn't even hit yet. And so, what are we talking? We're talking 35. 35. Basically, we're talking about a 40-point drop there. Okay. I'm not saying that's going to happen. I'm just going to say that you need to embrace all possibilities. Okay. And so, as we broke through here, we reached down, buyers bid it back up. Same thing, we get back down into basically the same area. We can paint it with a broad brush so you can better see it. And we bounced, and we bounced, and we bounced. And based upon the way the chart looks right now, we've been turned away so many times. If we get turned away again, and I think John's with us now. Yes, he is. Except, yeah, there he is. Hi, John. Welcome to the show.
Hi there. Thanks.
Yeah, I saw you online earlier. I saw you earlier, and then I went.
You know what happened?
Yeah. No, I don't.
Yeah, just a suggestion. What happened is I fell into the trap of registering, and then the confirmation came in, and then, but then I had to reboot because the machine is just totally overwhelmed with stuff I'm doing.
Sure.
And so when I came back on, there was no way to get back in. The confirmations had to re-register, and for some reason it didn't link. The link didn't work. So what I would suggest is when you get to send the confirmation, have a link that if you get knocked out, you can go straight back in easily in the future. because it took me, honest God, it took me 15 minutes to get back in.
I have to figure out. First, I have to fully understand what happened, and then I'll figure out some kind of a fix.
I'll explain it to you later.
Okay. Right.
But I see that it's the S&P there. Boy, I got to tell you, if this thing breaks out to the upside, there's going to be a monumental move on this thing. On the other hand, if we break down, it might not be so pretty. But I mean, you got to be impressed with the rebound so far today. It's really.
I mean, it's strong, especially the 11:30 candle. Now that's that is when the European markets close, and we often see a move, a substantial move. If it's been, especially when it's been a quiet day, we see a big move often, or some movement across a number of markets during that 30-minute period of time between we close the live training room, European markets close, and then we come back 30 minutes later and look at the charts, and the move we were waiting for all morning, there it was. We've seen that movie a lot of times. And see how it's, it did run right back up, but now it's being turned down again. And this is our lowest weekly trading zone. It's about 40 points below us. Do we have any major economic news coming out tomorrow?
Well, we've got the major news tonight, which is the Google, the three big companies, I think it's Amazon, Google, and somebody else. So, however that turns out, could be incredibly bullish or it could be really bearish. So, you got to be kind of ready. I wanted to kind of update people on this Maxim deal that I mentioned yesterday, because it's kind of important.
Sure.
Maxim actually opened. Look, I took a home loss this morning myself, just because I had to stick with it. You got to have the discipline to stick with it, because you never know. Something could get announced this afternoon on this thing. But the problem is the semiconductors. Everything opened lower, but the Maxim opened right on the low, and it rallied up very strongly, and it has some tremendous sort of buy signals underneath the market, but it hasn't, it hasn't really taken off yet. But the way it's acting right now, sort of consolidating here, if it starts breaking out to the upside this afternoon, I'd be inclined to hop on board, because the way the chart, if we close up near the high of the day chart, and assuming we don't sell off in the market, the odds of opening higher, possibly even gapping higher tomorrow, will be quite strong. And if it continues higher tomorrow, then you've sort of got quite a big safety net underneath you. But look, going into these takeover deals is a real roller coaster ride, and you have to grit your teeth if you're going to do it. So now it's funny, because I was actually going through some the markets earlier on this morning, thinking about what I was going to say today. And I actually was going to say that to try and buy this dip in the grains, and before you know it, just literally half an hour or an hour before the show, the grains turned, and they look very, very bullish to me right now. As a matter of fact, the most bullish probably is corn, because the corn didn't pull back at all, hardly, when everything else did. That is, it's very rare, but the corn is a very low deposit future. I don't think there's a lot of risk in it right now, because it's been very stable. And one of these days, and it could be tonight or over the weekend or something, you could. I once was in the corn. I went along before the close, and they opened $1,000 higher, in the night session, and that could be one of the things that could happen, sometime in the ensuing days. The beans have put in a pretty powerful bottom here, and the meal and everything, and the wheat. And I would say, as long as we close pretty strong today, I'd probably want to go long either now or before the close. The thing that's bothering me today is the gold and silver are kind of really acting weird. They had this big rally yesterday. We actually did pretty well on that. We got the dip. It was very difficult on this Fed news, and the thing dipped and then rallied right up into the close. We sold it near the highs, And then during the night, we tried to get back in a couple of times, and we did make some, gains out of it. But it's been another roller coaster ride. Now, I actually thought of buying the platinum this morning. I'm mad I didn't, because I put a buy signal out on it at 1,000, and stupidly didn't take my own advice on it. And it's 1,008 right now. I thought the gold was going to go, and I thought there'd be more of a pop in the gold, but hasn't really been the case. Now, the point but I would say this, if we go over 1347 or 8 and start getting up around 1350, and the silver gets sort of above 1720, I really wouldn't buy it here yet. I think these metals are going to have a tremendous rally, but they don't appear to be ready yet. Another thing that's going pretty well is the lumber, which we had to buy off the limit down move. I forgot to mention this yesterday on the show. Anytime you get a limit down move and it reverses right off the limit, that's usually very bullish. So I think the limit was a bit of a head fake, and we're screaming back higher right now on the lumber, which is really extremely look, it's almost limit up. So this lumber is not dead yet. The palladium also rallied today, but it sold off. We actually put a sell on it around 10.31. It's down again to 10.27. But I'd be inclined to go back long the palladium on any kind of a break back above 10.30. The platinum is actually, the platinum's starting to pull ahead of gold. But the weird thing is the silver and the gold are not confirming this metals move now. Now, if the grains rally into the close today, that could turn the metals tonight. And since it's a Thursday, what you've got to watch for is a potential buying opportunity around 8 or 9 o'clock tonight p.m. Eastern. And if we start breaking out higher, about a week ago we had went long the silver, and it ran up to about 70.5. It was a very good trade for us, and thank God we sold. But I think we could get a repeat of that again if tonight turns positive, and if tomorrow is positive on the metals, I definitely go with the flow. So that's kind of my take on that score right now. The maximum is if there is a takeover on this thing, you probably might want to take a shot at Xilinx and any AMD and other semiconductor companies, because maybe even Nvidia, because if this does get taken over, the rest of the sector will probably get a pretty good bounce. So you might get a double whammy out of it. What is a little bit troubling today is Nvidia, which we actually sold near the highs yesterday, is down a little bit. And I've noticed that when this stock starts going down, it tends to continue until it stops. So it could be, it's a very dangerous short, but it's a bit overdue for a pullback. And it might be a trade, but only for very professional kind of traders. By the way, Netflix, which if these three stocks all blow away the market tonight, and we sort of open sharply higher, we're probably going to have another sustained buying panic almost, because if you think about Netflix, the last time, as I think I mentioned to you, the previous time we sold the Netflix around 206, shorted it the night before when they announced the thing, and it went down to about 180. I think we got back long somewhere around 180 on our alerts, and it actually bottomed at 178. And believe it or not, this Netflix has rallied from 178 just before the end of December to 286 at its high. which is just stunning. You know, I mean, the $100 rally, $100+ rally in a month is really enormous. And look, we had this target which we copied, you know, from another analyst on Amazon at 1440, and we've blown through that. Got to 1470 yesterday, somewhere like that, and we're sort of going up again today. So this market is definitely going parabolic at the moment. Even the LABU has turned around. It's turning around right here, which is good. The bonds. Remember, we had a 147 target on it. Well,
correct.
we hit that this morning. So I have to probably say we're going to go to 145, maybe even the low 140s now. And the fact that the market is going up, you know, against this is pretty bullish. That's probably dampening the gold a little bit here, but not necessarily permanently. If we get, you know, you never know, if we get a turn here, it could be a big deal. While we're speaking, the corn is creeping higher to almost to a new high here. By the way, we caught a real break on the cocoa yesterday, when the cocoa went down to, you know, rather towards 1900. We went long, and it's actually incredibly strong today. The cocoa, it's broken to 2000, so I think we're in a whole new ball game here in the cocoa. We did get a little bit of we took about $1 out of the coffee on a bounce from yesterday, and we're back short. But I would go back long again if we break 121 or today's highs. The sugar is also one to keep an eye on. I think it's possibly bottoming here. The orange juice popped up, and we sold that again. It's coming down again now. But the cotton was the other break we got today. We got long that on the last little dip, and it looks like the cotton, both the cotton and the lumber we were talking about, are really going very, very well today. So. And look, even now the platinum is, I mean, the platinum can sneak away from you very fast. It kind of looks like it's on its way to, you know, 1020 and maybe even 1050 on this leg. So it's probably going to pull the gold and silver up with it at some point. But like I say, you just got to be. The problem is that I don't know why these gold stocks are acting bad today. That's what's really causing the problems for gold and silver at the moment. But it could all turn tomorrow, and if it does turn, then I think you've got to, you know, if we go higher from here, I think the metal's going to have a very bullish one, but they're not ready to do it yet. The other areas is we did buy the lows on the energy sector yesterday for a bounce, and we also shorted the natural gas at the recent highs, which has had a calamitous fall. I can't believe we got that lucky, but we, you know, that's the discipline. Just like your discipline every day, you know, produces sometimes amazing moves.
Yes.
This one, we got lucky with this one yesterday and the day before. So, and it's gone even lower. You know, it got down to 305 or so yesterday, and then it broke down again. It may not even bottom yet. You know, this natural gas. It's kind of, boy, it's all over the place. So it's you got to have your wits about you if you're trading this stuff, and you've got to be very disciplined.
Yes. Oh yeah, guys, I was going to bring up the natural gas chart, and then we had drawn this the other day. We pulled back as we had suggested the market might do, and so now we're trying to rally up out of here. If we don't get up and close above this CFMA1, this is a daily chart, then as John had suggested, market could be in for a drop. Our lowest zone is 40 points below us, and also tomorrow we have two very high impact news events. We've got non-farm payrolls, and we've also got the unemployment rate.
Yeah, good point.
That. Yep, unemployment rate, non-farm payrolls. Now the expectation for the unemployment rate is 4.1. Or is that last? No, the forecast is 4.1 on the unemployment rate. In the non-farm payrolls, the forecast there is 184,000. The previous reading was 148,000. So they're forecasting a pretty sizable jump from 148,000 to 184,000. Now, I originally brought this chart up so that I could take a look at that natural gas with you. GNG. What month are you in? H?
March. Yeah.
Okay. All right, this is a daily chart, guys. And now, what were your thoughts? Again.
Well, it's had a catastrophic kind of decline, and it sort of happened with the month change, because what actually went down was the February ran up to sort of right up to the highs. And then when the new month opened, it was sort of a lot lower, and then that ran up as well. So we kind of got a double run on that, and then we just put the stop up near the highs and a sell stop, and the next thing is it all fell apart. It was just pretty dramatic. So,
I mean, yesterday's drop was one of the biggest drops we've seen, and.
Right.
All the way back.
Right.
Well, right here we can see all the way back to November.
Yeah. I mean, it was unbelievable. Look at it. So, from 360 all the way down to, this chart I'm going to 360 all the way down to 285.
Yeah.
Or 30.
Any fundamental reason why this is happening?
Well, it's probably because the worst of the winter may be perceived to be over, but not not necessarily. So, but I guess there was a lot of tightness in the February, in the January-February sort of deal, and then the future months didn't reflect the same the same tightness. So.
What do you think about this memo? They released a memo, but they changed the memo, and
they haven't released it yet, have they?
Well,
have they released?
Well, the article I looked at this morning. Oh, and before I change my page, you heard about what's going on in Cape Town?
Oh, you mean the water?
Yeah, exactly. I really wasn't aware of it, and the headline caught my eye. A major South African city is about to run out of water, and officials say it will be the worst disaster since 9/11.
Well, that's probably a stretch, but
well, yeah, it's supposed to get your attention, and it certainly got mine. It's actually, when you think of Africa, you do not think of the picture that I'm about to show you. At least my trips to Africa look nothing whatsoever like that. The urban area was very crowded, and driving is a nightmare. Driving there, I don't. Have you ever driven in Kampala, or I don't know if other cities in Africa are like that, but it's every man for himself, and I've never seen such aggressive. I wouldn't even begin to try it. So this is the beautiful city.
Yeah, no.
I've
driven in some crazy places. I've been to Mozambique and Maputo, which used to be called there in some works. And I've driven in fair amount in South Africa. So
look at this picture, John. See that?
Hang on a sec. I got to pull it up. Just a second. Oh yeah. Wow.
That's. But it could all change tomorrow. I mean, look at the drought California went through, and then all of a sudden it began to rain, and pretty soon you're losing homes and businesses and lives because of the mudslides from so much rain.
Yeah. Yeah.
I don't know.
Look at the cocoa. The cocoa is looking fantastic here. The corn is creeping up to new highs, and the market seems to be kind of pretty firm here at the moment. My system might be stuck actually, so I might have to reboot again.
I'm showing on natural gas. I'm showing current price 285. And if
yeah, that's correct.
If this 280 area doesn't hold, I mean there's a chance we hold at 270 perhaps, and then if that gives way, I mean there's no visible sign of support really until we get down to the most recent low, which was put in December. And we've had a pretty good rally December, December 2017, December 21st, we put in the low at 253, and we do a leg and a retrace and a leg and a retrace and a leg. Now, the big question, guys, is this a deeper retracement or is it the beginning of a reversal? Well, once we take out this low here, it's a reversal, okay? And then traders will see this as a quote-unquote low-risk trade, and so they'll step in and attempt to rally it. Whether they'll succeed long-term or not remains to be seen. But, I mean, it's like a self-fulfilling prophecy. As prices get here, buyers will come in. They will probably come in early because, hey, if they bought it here, and held it anywhere up into here, they're heroes. And they'd love to get that action again. But just to point out to you, on the daily chart, to everyone in the audience, you always see our indicator set working on the 4-tick range chart in the live trading room, but because markets are fractal in nature, it doesn't matter what time frame I pop it on. It doesn't even have to be a time-based chart. It can be a volume chart. It could be, any kind of chart that you want to run. You're going to get, the indicators will go in, find the underlying rhythm of the market, identify it, and then you simply follow the steps. The difference comes in the amount of risk. The reason we use that range chart in the live trading room, the 4-tick range chart, is so that we don't have to risk more than 8 ticks on a trade to find out if we're on the right side of the trade. And this becomes very beneficial to those who are just getting started. Okay. So anyway, I just wanted to point that out because I pointed it out. What was it, back on the Dow the other day? But it was very clearly defined. Let's see if the Dow comes up. Yeah, when that sell-off started. Let me back it up. Yeah, the huge sell-off right here. This is on a 30-minute chart, but there is the bearish cross, and it took us all the way down. And then we caught that little rally right there, bullish rally. And now we've crossed negative again. And this here was kind of like a head fake. And we rolled it right back over. And it's trying to go long again. But you got to worry about these highs over here. It's got to get through those. So anyway, any other things you want to hit, John?
You know what? I'm having some technical problems here today, so I was maybe calling it today because my system's just gone down and
no problem.
The net is out and stuff.
No problem.
Okay, thanks.
All right, thank you for everything, and we'll talk to you tomorrow, if not before.
Look forward to it. Thanks.
Okay, bye. Thank you so much, John. Okay, guys. Let me mute his mic for him. Okay, here we go. Williamson asked, oh, Mike, I didn't see your question until just now. John, the nugget has to shore up over 33, then it'll be back above the lower line of an upward trend channel. Okay, maybe shoot him an email with that or something. Williamson, based on the chart of the ES, do you think it has hit the bottom? Boy. You know, I can't with any confidence say that it has. It needs to prove itself to us. You know, we've got this week's weekly trading zone here, which, you know, turned it away, turned it away, turned it away. It spiked it just enough to make us think it was going somewhere. Turned it away, turned it away, turned it away, turned it away. And we've been up here battling for the last, you know, hour plus. These are 30-minute candles. To consider going along at this point, I think that I would want to see a 30-minute candle close above 2842. Now, there's still this, okay? This could represent some good resistance. But because we'll be so close to that weekly trading zone at that point, that I would be okay with that, because along it, let's say you bought 42 on a stop, okay? Could you go 41? Well, this high is 39.75. Yeah, definitely, I think you want to go with 42. 42, don't give it a whole lot of room, you know, to hang yourself with. And even if it can't make, now if it can make it to the zone, if this becomes a tradable event, then you've got, from 42 to 50, you got 8 points of room to run. Hey, everybody knows 8 points in a day in the S&P, well, that's a mighty fine day. Now, what's this high here? 45.50. Yeah. Even if you waited for 47, by the time you have 47, the potential of hitting the zone at 50, it becomes a really high probability. So, but what I wouldn't do, if we get just a little green close up above that zone, I wouldn't go diving in, because we know that sellers got aggressive here, or buyers gave up. But here, buyers certainly have not given up, okay? We've seen aggressive behavior on the part of the sellers. So Williamson, I can't do it. Now, what I trade, I would also, I mean, that's doable. Buy 42 on a stop, and sit there and pay attention and watch what happens. Now, you can't make yourself crazy with, you know, every little tick. He who lives and dies by every little tick, boy, you're going to make yourself ill. The set it and forget it, I'm not crazy about that. So you got to figure out the happy medium, and really that comes in when you learn to take the emotion out of the trade. Okay, you have a high probability trade setup, something you've worked at and finessed and fine-tuned, and you know that it gives you a definable edge in the market. But that's all it does. It gives you an edge. And in having an edge, that means that it will move to its target more times than you get stopped out. I mean, just to keep it kind of simple, all right? How do you get the emotion? I wish there was a do this, do that kind of a scenario, but each person is going to have to approach it differently. Now, some people are just kind of the happy-go-lucky. That's just your nature. You know, you're just not going to worry about things too much. You just don't easily stress out over something. Other people are hypersensitive, okay, and that's your nature. So some will have to work harder than others, but if you address the problem on a daily basis, if you're going to become a successful trader long term, you have to figure out what you have to do to separate your trading decisions and the outcomes from your emotional state. You're not buying based on emotion. You don't sell based on emotion. Well, sometimes we'll jump out of a trade based on emotion instead of allowing it to, play through. Now, your next question, what you can do, Williamson, is you can just go to the mentoring page and book the next available slot. I won't be available this afternoon, but I think tomorrow afternoon is open. I've got some meetings today. Let me double check here. And I'm going to tell you when will be good. Let me get my calendar open. Give me one more second. I don't understand that email. I'll figure it out. Okay. Yeah, tomorrow's open, so you can book either slot. Okay. And there is a partners meeting tonight. So Williamson, if you come tonight, anything that we would work on in the mentoring session, we can do it, right there in front of God and everybody. And what that does is it gives you the benefit of not just getting my input, but also Michael's benefit and the benefit of other partners present who may have the same question or may be, dealing with the same issue, whatever that might be. So can you make it to the partners meeting tonight? You'll be there? Okay, beautiful. If you have some charts and specific trades, anything that you want to look at, grab some screenshots. And really, you don't even need the screenshot if you give me the market and you give me the time of the trade. Then we'll just bring it right up on our chart and you'll go, yep, that's it. And then whatever question, we'll be happy to address it for you. Okay? All right. Okay, now, there was another thing in the chat box. How about the double bottoms and the wicks? Okay. We do have a double bottom. From the big picture, I kind of see it as a triple bottom. On the 30th, on the 31st, and now on the 1st. 3 days. 3 days this area has held. This is the bottom of the wick, this is the bottom of the bodies, and this is a little bit of it all. Okay, but remember, you're looking at a 30-minute chart, which to those accustomed to the 14 range chart might seem like an eternity. I remember the first time somebody talked to me about trading on an hourly chart. I was like, what are you kidding me? I mean, how many candles will I get in a day? I'm a day trader and all this stuff. But I found, even though I don't necessarily execute in larger time frames, hourly, daily, that knowing what those look like are a real good indication of where the market is heading or attempting to head. Because with the 4-tick range, that's great for execution. And any smaller time frame that you might use that you're comfortable with, if you're not a CFRN partner, that's perfect for execution. You might get a couple false starts, but that's where you want to be. but that needs to line up with what's happening here. So what do these wicks represent? Well, it's sort of like when you see rejection on the chart, and I pointed it out on the gold chart earlier. Okay, price came down. It's like touching a hot stove. You touched it, and man, it ran the other way. Okay, and it left evidence that there was substantial buying pressure here. Okay, remember the candle opened here. What day was that? That was at 2 o'clock. Oh, Fed day. Okay, this was the Fed announcement right here. Opened here, ran up here, dropped to here, and got rejected. This is consolidation. This is consolidation. This is consolidation. I mean, we had a false start to the upside, which turned to be a leg, and a retracement, and a continuation of the leg. Okay, so going back to the S&P chart, always think about what happened during the life of that candle. Okay, it opened here, went all the way down here, and then got pushed all the way back up, and then opens here, drops again. So typically, if you looked at volume during this time period, you would probably see very little volume at these prices. You didn't spend a lot of time there, not a lot of transactions. You know, it doesn't always play out that way, but suffice it to say, when price is falling, when you put in a bottom like this with a wick, it's usually pretty bullish. And what happened? Pushed us right back to the zone. I mean, we got the same thing here. That long wick, bang, went right back to the zone. But obviously we weren't done here. Okay. Back to the zone. Back to the zone. So in a falling market, when you start seeing wicks appear at the bottom, it certainly looks like the S&P is trying to put in a bottom here. Okay. The thing that leaves me feeling a little uncomfortable is the fact that, okay, there's a low, yes. There's a lower low, yes. There's an even lower low, yes. And now an even lower low. We're always talking about the market putting in higher highs, okay, putting in lower lows. That's why I really want the market to convince me that it's going to really try to make it up to this next zone, because I'm going to be so bold as to say that by the time we talk on the radio tomorrow, price will either have visited 50.51 or 90.91. You're like, whoa, wait a minute. That's a pretty big move. It is. And so I'm definitely going out on a limb a bit to suggest that. But ultimately, if it doesn't happen tomorrow, then it happens Sunday night on the Globex Open. But eventually, we will hit 91, or we will hit 28.50. And it could be smooth as silk, or it could be a very bumpy ride. And that's all the information we have to go on right here. Now, we could come over here, do this, do this. We're on a daily chart, ESH. Okay. Now, that bullish cross came way back on September 5th on the daily chart, and it hasn't changed its tune since. I mean, there were days, you know, when it looked like it might. But look at those wicks. It came down and price reverted to the mean, the BBC, the bull bear cross. It touched it and ran away. Touched it and ran away. Came back. You know, when this turns red, yeah, we're thinking, okay, this could be it. This could be the bearish cross coming, and then pop. Not this time. Here, really looking like it might happen. Not yet. Now we pullback. It's one of the, one of the deeper pullbacks along through here. And already we're starting to see these wicks at the bottom. And the CFMA1 is still blue. Yeah, but there was a slingshot down there. Except I should have taken out the brown line, because I'm not a brown line kind of guy. Okay. This gives us a more of a bearish perspective. So we want to see this come down, turn blue, and we want to see this head up. Now, this was designed and created and programmed for sort of a wasn't really designed for the daily chart. However, you can see, like here, okay, based on this we were bearish, but what happened? So I wouldn't pay too much attention to the slingshot when you're going out into the longer time frames. It doesn't serve you nearly as well as it does on the smaller time frame. But since September, what was the day? September 5th, we've not had a bearish cross on the daily chart. Eventually, we will, but it may not be here yet. If we look at just the last leg up, okay, that would be this. As far as the retracement goes, we've already seen a 24% retracement. BBC is right at the 38, but we've got a green candle going right now. So we grab this tool. I guess that tool's not there. Right click, configure, go to drawing tools, go to Fibonacci price extension, make sure you just have image highlighted, and then grab that and you drag it right over there. And hitting apply, I'm not convinced that actually does anything, but it's blue and it looks like it wants to be clicked, so I click it. Pretty scientific, right? Okay, so now again we're measuring just the last leg up, okay, not the entire move. You got to look at it one way or the other. You can look at it both ways and then try to divine, what's really going on. Okay, so from the swing high to the swing low, Fibonacci price extensions based on just the last leg. If we break out to the upside, this could easily take us up to, well, I don't worry about easily. There is no easy in trading. We could simply go up to 29.12 area. Then above that, 62%. There's 100%. Either one is possible at the moment. Okay. Just keep in mind how long it's been since we've had a bearish cross in the daily chart. All right, let's move on. Hope that helps. And yeah, anything else you want to go over tonight in the partners workshop, we'll be happy to do that. And for those of you, as Michael said, who are on the trial, you want to be in the partners workshop tonight, all you got to do is respond to the email Michael sent you. And if you didn't get the email or can't find the email, then just email us, support@cfrn.net, and we'll get right on it and send you out the information and make sure you get into the meeting tonight. All right? Okay. All right, so we've covered the ES in great detail, and it is a waiting game. Now, on the short side, I think I started to get into this earlier. Last night's Concierge Trade Alert was to consider selling 28.29. We dropped 19.5 points, $50 per point. Now, that's almost $1,000 per contract. However, we never get out at the swing low or swing high. Why? Because we teach you to trail a stop, and if you trail a stop, you're going to leave a little something on the table. You can leave a lot on the table. Depends upon how you choose to trail. And there's a couple different ways of doing it. You could trail behind the CFMA 1, you could trail behind the BBC, you could trail behind the low of the previous candle, depending upon what sort of time frame that you might be working with. So let's go to the Dow. And we're at 26,235. Interesting. Guess I hadn't really looked at these. Well, look at them, but I haven't been hawking them. 26,265. Come on. 265. There we go. 26,260. All right. That's this week's zone. 26. Overhead, we've got, let's say we do get good economic news tomorrow. Non-farm payroll, unemployment rate, let's say those are positive. That could certainly rally the market. So we got 410, 415 overhead. And then below, did I say No, I meant to. The lowest weekly zone on the Dow, 26045. 26040. So we've hit the lowest zone already on the Dow. Hit it to the tick there. Now, and see how we walked along it here on the 30th? After that big sell-off. This sell-off took us down. Now this 120, 125, that is not one of this week's zones. So let me get that out of there. Okay. So we danced for a moment below the lowest weekly trading zone on the Dow, and we rallied from there, leg and a retrace. This is 30-minute chart, and a leg, and we've spent an hour and a half. Got a bullish cross, hit the zone. Would it be reasonable to expect price to revert to the mean? Yes. And then we have a leg and a retrace, and a leg and a retrace, and then potentially another leg, which could take us back to the zone overhead and points beyond. And you know what the other side of that coin looks like. Now, last night, let me get back to that. Last night on the Concierge Trade Alerts, email said to consider selling 26,145. Sell 26,145. Okay. Now, right here, okay, so that pullback, depending upon how closely you're trailing your stop, that pullback might be where you were taken out by the market, okay, and you left a little on the table. The low of this candle was 69, so basically you got about a 70-point move right there. And then the pullback, and then a continuation through the zone, and the low 25,922. So we got 145. You know, we'll just call it 200 plus. It's close enough. As far as the buy side on the Dow, we were looking to be buyers at 26,275, which, did we make it? Oh, we did. Yep, that's the truth about trading right there. No, we didn't make it. Okay, I thought we did. The high was 26,280. Okay. Well, gee, don't I feel better. Alright, so we were saved by, what, 3 points? No. No. Yeah, I'm not going to get off that easy. Okay, let's try this. Let's try that again. 26,275. Yeah. So, that tick, that point, $26,280. So it actually went 5 points over the line. So, now on a 30-minute chart, you might have seen that as a walk away. On a 5-minute chart, you may have had a completely different picture, and you might have had a suitable trade entry there. So it was either a walk away or a stop out. And by the way, it doesn't matter how hard you work and how much you practice and how many indicators you buy and all that kind of stuff, you will still get stopped out. It's an intrinsic part of trading, okay? There's no escaping it. No guru, no crystal ball, no soothsayer, nobody, nowhere, not no way, not no how can avoid being stopped out. The only way to avoid being stopped out is to don't place a trade. But then you're not a trader. So at least you know the truth about trading. Okay? Alright, the Russell. Now I know we broke the lowest weekly zone on the Russell. The lowest weekly zone on the Russell was 1585/86. Okay, and we broke through that early on in the week. Above that, we had 97.98, which did its job, so to speak. Looks like we came okay, missed it by 3 ticks right there. Okay, last night's email said to consider selling 1577. So 1577. Okie doke. If you were short at 1577, the swing low here, there's no real major pullback there until important prices, important areas, almost always tested. So from 77, we go to 60, we'll call it 66, so that's $550 per contract available. However, you know the drill. You're going to leave a little on the table if you're trailing your stop. If you're trailing your stop way back here, you're going to leave a lot on the table. Okay. Price comes back, gets just above the trigger, drops again. This time puts in a low at 1568.40. Okay, so from that's basically going to be, let's call it 69. So that's, oh, that was supposed to be 550. So the market made available. And now, if we have 9 points, we're going to call the high, I mean the low, we'll call it 69. So that's 8 times 5 is $400 per contract available. Okay. And again, we are below the lowest weekly trading zone right now on the Russell. Down the S&P dance pretty much to the beat of the same drummer. And the Russell often does. The NQ, that's the wild card. It has its own marching band. Alright, so the Russell, on the buy side, we were way up at 1588. And so, no dangers there. If the market continues to sell off, we could see something else there. So, NQ. NQ. Last night's email said to consider selling 69.74. So there we have it. Important prices, important areas are almost always tested. 69.74. Okay, so 69.74. What a nice move. Okay, so if you were short, 96.74, market put in a low. Any real pullbacks, it just kind of dropped. Got a swing low at 68.98. Wait, what? Let's try that again. Sell 69.74. That makes a little more sense. 69.74. Okay. And what was the low? This is called the low 6,900. Fair enough. It was actually 68.98. All right. So that's 74 points at $20 per point. So That's $1,400 per contract available. But you can't have it all. Hopefully that, you know, when you see this, back to those wicks that we were talking about, okay, when this candle closed, hopefully you would have been, you know, at least getting out above the high of that candle. I mean, after the fact, it's easy to see the pattern. We're not pattern seekers, but you can't help but see it. Okay, a little more difficult when you're in the heat of the battle. That's why you can't make these types of decisions of how you're going to react in the moment, so to speak, when you have bullets, you know, whizzing past your head. You know, you're the foot soldier. When you're trading, you're the foot soldier on the battlefield, jumping from foxhole to foxhole to foxhole. The shot caller, the general, he's up on the hill in the tent, well fortified, got a cigar, glass of sherry, he's looking at the maps, and he's getting ready to tell your platoon, you know, what foxhole to jump in next. He has a clear mind. He doesn't have bullets zinging past his head. And that's the best analogy that I have to offer you when you are preparing. You don't create your trading strategy on the fly. Now, you may reach a point where you become such an accomplished trader that you simply sit down with no indicators and you look at the chart and you place a trade. Are there people capable of doing that? Absolutely. All over town. Most of us ordinary folks need a little help. All right, from 74, important prices, important areas, almost always tested. So we got a 24-point drop there. Okay, to call it, if it was a 20-point drop, what would that be? Times 20, $400 plus per contract available. All right. Now, what about the zones? In Q, I would say, is probably the greater challenge, but I won't bore you with that. The zone for this week was 52, 53 right here. 52, 53. Okay. The zone below is 69.17/18. Now, if right, 69.17/18. Didn't quite make it there. Spiked it there. Is that the lowest zone? No, the lowest zone is way down at 68.29/68.30. So I don't suspect that we'll see that in play, but you can't rule it out. I mean, that would be quite a drop. But file it away if you're a NASDAQ trader in the back of your mind that there is this carryover effect on the zones, and so if it doesn't, you know, happen tomorrow, could it happen Sunday night? Monday, Tuesday? Sure. No doubt about it. So 52, 53, and then above that was 7,000. So above 52, 53, we go to 7,000, 7,001. Okay. And for the whole week, We did hit it. Globex opened. This was the Sunday night Globex open. Right there. You'll notice on the candle it says the 28th, but down at the bottom, 29th, because the session is Monday session. Sunday night open, Monday session. Okay. So, Sunday night Globex open. Okay. And then above 7,000, 7,001, the next zone up was way up at 49/50. Okay. So we did not reach that. We bounced off of this zone after the open number of times, and then we took the drop. Okay. And we're still dropping. All right, let's go to gold. And I already did the zones on the gold while we're talking to John. It was 62.63 and 56.57. 49/50, where we hit it once and then consolidated again, and we're rolling right back into that area, right down. And if you're a trend line kind of guy, and you probably be drawing something like that, and to close above the zone and above the trend line. But before I got long, I would want to take out that high. That's just me. Well, that does leave me a lot of room before I hit the zone. Sometimes that happens, and you just have to go look for. Now, we had no triggers yet on gold today. The idea last night, we wanted to be a buyer at 56. No, I'm sorry, that's totally wrong. On gold last night, it was a buyer at 54, knowing that it would only give us 2 points room to run. But hey, that's $200 per contract. The sell side, we were looking at 33, and we can get it. So no triggers yet on gold. It's unusual, but it happens. All right, on bonds. Last night's email, consider selling 147.15. The initial drop was good for 5 ticks at 31.25 per tick per contract available. So 150 bucks. Important prices, important areas, almost always tested. And so the next move down, 6 ticks, and then the final move down. Oh, when I calculated it before, it was at 21. It's fallen a little bit farther. So now, 146.20. Well, here's the deal. If it were to drop, if it drops, just a few more ticks, from 147.15 to 146.15, that is $1,000 per contract available. Are we there yet? No. Low so far is 20, so we would need to take out the low of the day, plus 5 ticks. So it's been a nice move with 3 distinct opportunities available. Soybeans. Last night's email said to consider selling 9.88. This first little drop, 2 3/4 points, $50 a point, got back above the trigger, dropped 10 points at $50 per point, and got back above the trigger, and so far we've dropped down to 87, I don't know, 85.50. So 2.5 points on this move. And the last market is crude. Okay, this is when the crude inventories came out. Now, looks like I might have already done the zones on the crude. 64.30. Now there's a zone below. It's 60. I'll tell you, it's 62.85 / 62.90. Okay. Yeah. I don't see any point in putting it down there, but on your chart, feel free to go ahead. Okay. Above 30.35, 65.20 / 25. And you can see here we hit it right to the tick. Came down, retrace. Is it going to be good resistance? Yes. Boom. Consolidate, and then another boom. So we definitely had an overshoot here. Now this buy 64.10 from the other day, just looking for 20 ticks, $10 per tick. That's $200 per contract available. You know, crude's a deep market. If you got 10 contracts on, from here to here, with 10 contracts on, that's a $2,000 per contract move. Okay? Now, moving forward, last night's email said consider buying 65.35. And I think that got a little messy. A little messy and sideways choppy. Yep. Buy 65.35. 65, 80, 85. Yep, that's this week's zone too. And then above 80, 85, you've got 66.60. Should be right. Right there. Okay. Now, on this first trigger, let's take a look. If you're trading a 30-minute chart, okay, $10 a tick, that's more risk than I think you want to put on. Okay, this risk scenario's a little better. I guess this would be even better. But on the upside, look at the high was 42. We're talking about 7 ticks. All right. If you were in that trade, I don't know where your stop was at. You might have had a reasonable stop on the 5-minute chart. On this next move up, we got up to 61. And then on the next, or the final, well, no, not the final, but the next move up, 73. So almost $400 per contract. And we're just kind of in a range here. Leg and a retrace, and a leg and a retrace. And then a leg, higher high, right? But also a lower low. See that? So when you get a higher high followed by a lower low, expect some of this sideways consolidation, chop, whatever name you were given by whoever initially taught you. Okay, 88, we've now dropped to 85.25. Okay, so that's 2.75. That covers them all. And the S&P coming off once again, pretty good drop that last 30-minute candle. We're 6 minutes in to this candle. Okay, real quick, and then we'll go to the good word for the day. All right. So on just this leg right here, we hit the weekly zone. We've now pulled back 38% retracement. We're attempting, it looks like, to build a green candle. Okay. The 62% retracement is down at 28.20, and if that's taken out, good possibility, if not probability, that we go down to test these lows, possibly even this low. Okay. What if it reverses? What if that low was the low? Again? Alright, I guess somebody must have need to see that again. Configure. Drawing tools. Fib price extension. Image only. Drag and drop. Okay. Apply. Close it out. Now it's ready to do your bidding. Okay, so what do? We come here. From the low to the high. To the swing low. Now, that's the swing low so far. You know, what happens in, the next few hours of trading? This is just an idea based on purely math. There's nothing fundamental in this. It's just math. If we got a 100% price extension, which would basically mean a duplication of this leg, and a duplication of this leg doesn't mean it would look exactly like this leg. It would simply travel the same distance. Okay. Now this 100% fib extension puts us right up around a weekly zone at 50.51. So is that possible? Sure. I mean, it's math. So go figure. Pun intended. All right. Oh, now earlier you may or may not remember, but I did say, guys, I'm gonna put you on hold for just 1 second. I'll be right back.
Is that loud? No, I was just.
Okay. Let's go to our good word for the day and talk about the island of blessing. Is that where you live? Let me wait for my notes to catch up to me tonight. Catch up to me. Okay. Oh, do come on. I honestly thought I had this resolved for a day or two, but it came back. Hang on. Let's see what I can do. Okay, now we can talk about the island of blessing. Colossians 2:10. You are complete in Him. Ooh. Don't need a bigger house, faster car, more money in the bank, some money in the bank, an occupation, a family. No. In today's society, you got to have some clothes, right? Or you get arrested. But it does say you are complete in Him. Because in life, we're always thinking about, I mean, at least in my own life, first Mercedes I ever owned. It was at the lower end of the Mercedes range, but it had that medallion, and I just knew. Now, this is only one of a gazillion examples, but I just knew that if I got the car, I'd looked at it, test drove it. If I owned that car, man, oh man, I would be complete. All the ducks would be lined up in a row, and because I owned and drove that car, and yeah, it looked pretty good doing it, then everything else in life would just kind of work out. People would respect me more. Actually, I found out that the opposite was true. Many people had a very negative attitude and kind of, they were haters. You would hear comments like, "So what kind of drugs do you sell?" I'm sorry, huh? "Oh, you're sporting around in that Benz, you got to be doing something." Yeah, it's called going to work every day, trying to make something of my life. Yeah, right. As they got back into their non-Mercedes. So, whoa, that was a real shock to me, because when I drove a Jeep, a CJ7, there was this kind of easy camaraderie among Jeep owners that if you're going down the road and there comes another Jeep heading towards you in the other lane, you always waved at each other. Maybe you tooted the horn. It was a community, not the Mercedes. And it wasn't just because that was a new one, but because I owned older ones after that, later in life, classic, like the 450 SL, soft top, rag top, whatever. Yeah, I never figured that all out, but let's not hang ourselves up on it. Because what really matters is not what kind of car I drove or you drive or anybody drives or the house or any of the other stuff I mentioned. Colossians 2:10 simply says you are complete in Him. If you go looking for something else to complete you, you're going to be like I was about 3 days after I signed the final paperwork and I'd actually driven it to work and back home again 3 days in a row. Was my life now complete? Was it perfect? Were all my bills paid? Was I any taller? No. Nope. No. I was not complete. I just knew. Now this is after I had had many other things in my life that I knew would complete me, right? Get this job, get this girl, whatever it is, Even though it had been proven to me time and again that things don't complete you. Boy, I sure had high hopes on this car. And same old story. In his book, Outlive Your Life, my favorite Christian author, Max Lucado, says the Greek word for blessed is Makarios. It's the name of an island off of Greece. It was known as the Blessed Island because it was self-contained. The residents didn't need to leave it in order to get their needs met. The natural resources of this island were so rich that everything needed to enjoy life was already there. There's a lesson for you. The moment you trust in Christ as your Savior, He becomes your King, and you begin living in His kingdom. You don't have to leave it and go elsewhere to find what you need. Because if you got to leave there to go find what you need, trust me, you don't need it. More importantly, you don't want it. Okay? If it's outside the gates of His kingdom, well, there's a reason there's a gate. Okay? You don't have to go elsewhere because everything that you need is all around you in the island of blessing. You don't have to strive for God's blessing. You don't have to do anything except tune in because it's already there. You just got to tune in and receive it. It's kind of like radio. There's no orchestras or newscasters inside that little box. It's a conduit and a point of contact. Even if your radio breaks, the signal is still there. all around that little broken box are all those signals that you used to enjoy. The orchestras and the newscasters, but no more. All your radio does is receive the signal that comes from another source and deliver it to you. If you lose sight of that fact, you'll give the radio more credit than it deserves. I mean, just imagine if you took a radio or any modern device to some lost civilization, some people living on a far and distant island. Now, if you turned a knob on that box and all of a sudden sound came out of it, they would probably either bow down to you or take your head off. One of the two. One of the reasons that we don't recognize the blessings of God in our lives is that we confuse the means of delivery with the source itself. If something doesn't miraculously fall into our lap, we think it didn't come from God. But that's not true. God will bless you at different times, through different people, in different ways. But you must always remember that they are only the carriers of blessing. God is the source. And so, anytime God blesses you, rarely will it fall from the sky and bonk you on the head. It's going to come through some other person, a situation. God's arm is not short. He has no problem getting the blessing to you, but you have to be ready to receive the blessing, and you have to be tuned in. And as long as you remember that He is the source, you're never more than a prayer away. And better than a prayer of want or need, because God knows what you want and what you need, is a prayer of thanksgiving. He is the source of it all. So if you want to live on the island of blessing, do not forget, you got to tune in to the source or you'll miss the message. That's our good word for the day. Okay, S&P continuing to fall. We're going to wrap it right here, right now. Just wanted to I would reboot it, but that would take longer than this radio show. So now we're sitting atop the 62% retracement. We were at the 38 a moment ago, and we hit the 50, and we hit the 62. Okay, and that little low right there at the top of this shaded box, if we take out that low, it becomes a high probability that we're going to the bottom of the box. As we approach the bottom of the box, though, eager buyers should jump in rather than let it come down and test the low. They don't want to get left behind. I mean, that was a nice ride, and that was a nice ride, and that was a nice ride. And so they're going to expect this to be a nice ride until proven otherwise, or unless selling pressure just completely overwhelms them. So there you have it. We'll go into more detail. I'll leave this chart up. In fact, I'm going to go ahead and I'm going to draw it right up next to that candle. So tonight in the Partners Workshop, we can continue our discussion here. Okay? Now, what's the one thing in the world you don't want to be right here, right now? A buyer. Okay? There's an old saying, you never buy a red candle You never sell a green candle. So if somehow, some way your 4-tick range actually, let's say this pulled back enough, right? But you still had this red body up here. It pulled back enough to generate a buy signal on your 4-tick range. You got to ignore that, okay? Because the force is not with you. As price drops lower, things could change. And where will you see that change first? Where will it stand out the most? On the 4-tick range. I go there. And I make this a 4-tick range. And I make it an ES chart. So while the larger time frame, the dominant time frame, whatever higher time frame you choose to use, gives you a better idea of the overall trend of the market, if there is one, okay, since see, we're only getting a look at about the last hour of the market's activity here. Got a bearish cross, and it's been steadily down. Now what's price doing? Reverting to the mean. So attempt to pull back to the BBC. If it hits the BBC, we'll either end up with a bullish cross on our hands, or we'll get a, right here, we'll get a down close or a red candle, and then you would sell the opening of the next candle minus 1 tick. However, look at where these are. Okay, we need to see if and after such, and after knowing the bearish pressure that's overhead, the first little, bullish cross, I'd probably be patient and wait. It takes time to turn a big ship around. Okay? You'll notice now sometimes there is a rejection and you get like a V bottom kind of thing, right? But more often than not, if there's going to be a change in direction, see, we're moving up, there's a change of direction coming, consolidation, as it, think of a big aircraft carrier making that, you can't turn on a dime like a speedboat. You need a wide berth to turn that thing around. It is more common to see a V shape at the bottom and a rounding top of some configuration at the top. So V's happen at the bottom. You don't see them too often at the top, but they do happen. So what do we expect from here? Well, we want to see confirmation that buyers are showing up and that they mean business. Okay. Now you got the down close right there on that candle. Okay. But these do not support a short trade. So when these are out of whack, you just sit and you wait till a clear picture evolves. If we continue up, it will be this area here, from the 50 to the 30. If we rally, of course there's a 24 there, but you see how this sort of sideways movement in here, Never could, you know, larger time frame, smaller time frame. Remember I said earlier, just a minute ago, if this pulls back enough, it could create bullish cross on the 4-tick range. And it might come back, kiss the BBC, give you an up close, you go long, and you get your head handed to you. Why? Because it's a head fake. When the trend has been down for a significant period of time, like in this case, just on the 4-tick range, we're looking at the last 2 30-minute candles. About roughly an hour here. Okay. All right, so that's it for today. That's enough for today. And I will see all of you partners tonight in the Partners Workshop. Once again, if you have been on the trial and you are ready to become a partner, use the email that Michael sent you earlier in the week to address that. And then if you can't find the email or deleted it or the dog ate it, just send an email to support@cfrn.net and we'll be happy to send that out to you and get you your invitation, and you'll be in the partners meeting tonight with us. All right. Thanks so much for tuning in today, guys. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.